Good afternoon, and welcome to Farm Focus for Tuesday, January 14th. Corn and soybean prices finished close to unchanged as traders are reluctant to add to positions ahead of tomorrow's Phase 1 trade deal signing with China. March corn futures finished a penny lower at $3.89 per bushel. New crop December corn down a penny at $4.04. March soybeans unchanged at $9.42. New crop November beans unchanged at $9.70. Kansas City March wheat was 4 cents higher on the day, finishing at $4.97. Minneapolis March wheat up a penny at $5.56. Outside markets were also relatively quiet today. February crude oil up 30 cents a barrel at $58.38. Ethanol down 1 cent per gallon at $1.36. Gold down $4 per ounce at $1,546. The U.S. dollar index up 2 points at 97.08. And the stock market currently 54 points higher, with the Dow Jones trading at 28,961. Livestock markets quiet and mixed as well. February live cattle up 30 cents at 126.85. April feeder cattle down 15 cents at 148.65. And February hogs up $1.78 at 67.68. Grain prices finished mixed on a lack of fresh news again today. The trade is also anxiously awaiting details regarding the Phase 1 trade deal with China. President Trump and China's Vice Premier Liu He are scheduled to sign the agreement tomorrow. A verbal agreement was announced by President Trump on December 13th. This is nearly a month ago when we first heard about a Phase 1 trade deal. Since then, the deal has gone through the legal and technical review. It's also been through the translation process to ensure that both the U.S. and Chinese versions are identical in language. Over that month of translation and reviews, there have been no reports of major issues or problems through these steps or stages. U.S. Treasury Secretary Steven Mnuchin says that the 86-page agreement will be released immediately following the signing tomorrow. The trade is very anxious to learn if the trade agreement will result in much larger purchases of U.S. soybeans, maybe wheat, as well as livestock products. But today we want to focus on some of the ethanol byproducts as well. Starting with exports of fuel ethanol, after fairly consistently increasing our ethanol exports following the drought of 2012, exports have somewhat leveled off here over the last year and a half. Exports of fuel ethanol are a significant component. We don't have the final numbers yet from 2019. We're waiting for the December numbers. But in 2018, U.S. ethanol exports accounted for over 10% of ethanol production. Given the fact that it is a large share of U.S. production is exports, where does those exports go? The green line is Brazil. Over the last 5 years, Brazil has been fairly consistently the largest buyer of U.S. ethanol. The second largest buyer of U.S. ethanol is Canada. It's shown in the black line, fairly consistent purchases over the last 2 to 3 years. The third largest buyer of U.S. ethanol over the last 3 years has been India. That's shown in the purple line. The Philippines and Mexico, shown in blue and brown, much smaller buyers of U.S. ethanol, but consistent buyers. And then China, shown in the maroon line. You can see that that's at 0 over the last year and a half. But beginning in 2015, we saw that maroon line. That's China buying ethanol. Then we saw it again in 2016, a couple of waves of buying early and late in the year. Then they had somewhat of a break. But then late 17 and early 2018, China became a fairly large buyer as well. The Chinese trade war began in July of 2018, and since then, China's imports of U.S. ethanol have been at 0. We can see it a little bit more clearly on a chart that shows just China purchases of U.S. ethanol, and again, beginning in 15 and some big numbers in 2016, and then again late 17 and 18, but since then, no exports of fuel ethanol to China. A chart showing U.S. ethanol imports and exports, ethanol exports in red, imports in blue, shows that over the last 4 or 5 years, very insignificant levels of ethanol imports, while ethanol exports have been increasing. Unfortunately, 2019, through the first 10 months, we're down 14%, and it's estimated that our exports of ethanol this year are going to be down significantly. That's a limiting factor as far as how much corn we use in the ethanol industry. In addition to fuel ethanol exports being down in 2019, we don't have the final numbers yet, but distillers grains exports are estimated to be down 8.9%, to the lowest level going back to 2014. If it would be announced that China is going to be buying U.S. ethanol or U.S. distillers grains, that would be great news for the ethanol industry and could hint towards maybe an improvement in the overall U.S. production of ethanol utilizing more corn. We don't expect that China will be buying a lot of U.S. corn, but ethanol and distillers grains could be an important factor for the corn market. In other grain market news, South American weather remains mostly favorable. USDA did not change its estimates for South American production of corn or beans in the January crop report last week. USDA is projecting that Brazilian corn crop at 101 million metric tons. That compares to 101 last year. USDA is estimating that acres will be up, but the yield will be down from last year's record level. USDA is estimating that Brazilian soybean production will be a record large 123 million metric tons, up from 117 last year. In Argentina, USDA expects corn production at 50 million metric tons, down just slightly from last year, and Argentina soybean production at 53 million metric tons, also down slightly from last year. If the weather remains favorable for Brazil and Argentina into February, we expect that these estimates from USDA will be on the increase. We've mentioned that palm oil has been a supportive item for soybean oil in the soybean market as well, but palm oil prices have pulled back slightly off of the highs over the last couple of weeks, but they remain at the highest level in over 5 years. Strong domestic use of palm oil in their biodiesel programs for both Malaysia and Indonesia, combined with reduced production, has palm oil stocks very tight. Malaysian palm oil production down sharply in December from last year. Last year is shown in yellow for December. This year shown in the black line, down significantly. In fact, the second lowest production total over the last 12 years. A similar situation was reported in November when production was well below the year-ago level. Bottom line is lower production combined with strong demand has palm oil prices very strong, and in fact at the highest price going back to 2014. Whether or not palm oil can hold prices up at these elevated levels will be a key factor for the soybean oil and ultimately soybeans as well as we go through the next 3 to 5 months. Taking a look at today's March corn chart, corn prices did post a new high for this move earlier today, but pulled back a little bit off the daily highs, with the market is now challenging the highs posted a couple of weeks ago at 392. The overall chart looks pretty good as corn is trying to break out of its pennant formation and technical indicators are pointed higher. So with just a little bit of friendly news, we wouldn't be surprised to see March corn try to push just a little bit higher. The funds are still short about 72,000 contracts of corn, so if we would have a breakout to the upside, additional short covering could definitely be a possibility. Turning to the March soybean chart, bean prices are consolidating, really haven't gone much of anywhere over the last few weeks. We did have a spike up to 961, and that would be the first level of overhead resistance if we could get some friendly news. A lack of friendly news could easily push us back to chart support at 933, and then we've got the 40-day moving average coming into play at about 925. Turning to our Kansas City March wheat chart, wheat prices made a new high for the move earlier today at $5 per bushel on the nearby March Kansas City chart. That keeps the overall chart pointed upward. Technicals also pointed upward. They're getting into the overbought territory, but no sign of topping action yet from the chart or the technical indicators. This is Dan Cowger for Heartland Farm Partners. Thanks for joining us, and have a good afternoon.